Dr. Boyce Watkins, and today I'm going to talk a little bit about some of the things happening in the stock market. First, we're going to start off by talking about what happened with Amazon and Apple. There was some really good news that came out of Amazon and Apple, and I'll give you my interpretation of that. Also, McDonald's tested out this veggie burger, which I think is kind of crappy. I don't want to eat McDonald's without meat. So get comfortable, buckle up your seatbelt. We're going to get started on the Black Financial Channel right now. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black wealth and Black economics every day, sometimes as much as 10 times a day. We just have one condition. The condition is that we are Black first. Black first means that we put our community at the top of our priority list. Black first means that Black wealth is the most important wealth. Black first means we are educating our kids and breaking generational curses. Everybody who is investing in their children right now, say something in the chat. Everybody who's teaching their kids about wealth, say something in the chat. Everybody who is breaking generational curses, say something in the chat. If you're the first person in your family to go to college, say something in the chat. If you are making sure your children have a better life than you had growing up, say yes in the chat. Everybody say yes if you're doing something to better your family and better your community. I want you to be very conscious of that. That's what we're all about. That's why I talk to you guys every day, is because I just really want to do my part in encouraging all of us to believe in ourselves and to do the best we can to be the best people we can be and to step up, man. You got to step up. I want everybody up in here buying stock. I want everybody in here making investments. I have a whole PhD in this stuff. So believe me, I can guide you on all this. I can explain everything to you. I can break it all down to you in ways a lot of people can't. I can do it all for you, but at that point, I need you to do some things for yourselves, okay? So what I want to be able to do is I want to be able to do a survey of all the people that listen to my podcast regularly and say, how many of you regularly invest in the stock market? And I want that number to be like 95%. In the Black Business School, it's about 92%. And that's very important because millionaires are much more likely to be stock market investors than regular people. The number one factor, did y'all know this? This is according to research studies. These are things that I did when I was at Syracuse University and I was writing research papers. They found that stock market investing is the number one factor in determining who's going to be wealthy and who's not going to be wealthy. Did y'all know that? Did y'all know that? So when you see people that don't have any wealth, ask them, do you invest in the stock market? And chances are the answer is going to be no. Or they haven't been doing it for very long. So I just encourage you, understand that, to be wealthy, you got to know where the wealth is at. It's very important for your economic health. All right, anyway, do me a favor, hit the thumbs up button, thumbs up, share, subscribe. I had a few free minutes before I start class tonight. We're doing our options income class tonight. We do this every Thursday. So if you'd like to join or see the recordings, this is going to be our last week though, but the recordings are all available. Feel free to go to boycewatkins.com if you'd like to take a look, or if you're on Instagram, hit the link in the bio. All right, so let's hop in here and let's talk about what's going on with the market. Now, I saw somebody that said I'm not a risk taker at all. Well, that's a myth too. Some people think that in order to invest in the stock market, you have to be a big risk taker. No, you don't. I'm not a big risk taker, but believe me, if you're sitting there letting inflation eat away at your money and you're not making your money work for you, that's a massive risk. If you're living paycheck to paycheck, depending on the corporation to take care of you, that's a huge risk. You're living right on the edge. You're taking bigger chances than I am. So just understand that I'm not a big risk taker either. In fact, in the options income class, I teach the students how to sell call options so that you can take your income out of your stock without taking a lot of risk. Right. So just understand that I'm not a big risk taker and I'm not a greedy person. So just get rid of that myth that investing is just so risky and scary. It's risky and scary if you don't know what you're doing. It's risky and scary if you're listening to people who are buying a bunch of Dogecoin and this other crap that was out here. It's risky and scary if you're taking advice from the wrong people. But believe me, the worst thing you can ever do for your wealth. In fact, let me say it like this. If you ever want to guarantee yourself to stay poor, try to get rich off a paycheck. Try to live off a paycheck to paycheck, and see how rich you get. That's not there's no uncertainty there because you're guaranteed to never ever become wealthy 9 times out of 10, unless you're lucky enough to get to the NBA or something like that. All right, so anyway, let me get back and get refocused. I had to share that point. I saw that statement and I wanted to make sure I brought that out. All right, so here's the deal. And at the end, I'll give you guys a stock pick that I really like of a company that I bought, and I'll share this with you toward the end. So stay to the end, and I'll share that with you. All right. So first off, right now, I'm seeing really good news with the economy. I'm seeing really good news. Two of the big indicators this week of what kind of economy we're looking at were the reports of Apple and Amazon. both Apple and Amazon came in with strong numbers. Now they both had problems. In fact, Amazon actually had a net loss, but they were able to isolate the loss by saying, "Look, this loss came from our investment in Rivian, the electric vehicle company. So it's not that bad." They also gave guidance for the future to basically say, "Look, we're killing it. We're making a ton of money in a lot of other areas." Amazon was important because Amazon's a big indicator of how the economy is doing, how the consumer is feeling. Amazon came in, check. Apple came in solid. Apple's still selling iPhones. There's inflation in their cost structure. There are some economic issues that they're a little bit concerned about, but Apple came in good. Check. And if you recall, 2 days ago, I mentioned to you guys, I don't know if I mentioned it here or on Twitter. You should follow me on Twitter. I'm Dr. Boyce Watkins 1, Dr. Boyce Watkins 1. And I did mention that I was buying some Apple because I had an indication based on my research that Apple was going to beat its numbers, and they did. So it wasn't a big investment, but I made about a couple $1,000s or something. So it wasn't a massive investment, but I did make that move. Normally, I don't make those short-term moves, but I did it because I had a good feeling about Apple. Anyway, a lot of people are talking about us being in a recession. Now, let me ask you all a question. Yes or no? Yes or no? How many of you believe that we are in a recession right now? Give me a yes or no if you believe that we are in a recession right now. A lot of people are talking about recession. Everybody's wondering when the recession's coming. Give me a yes or no if you think we're already there or if you think it's going to be in the future. What do y'all think? Do you think we're here? Okay, I see some yeses, a lot of yeses. Okay. All right. So yeah, yes is a reasonable answer. Yes is a reasonable answer because we've had 2 quarters of negative economic growth. That is kind of an armchair analysis way of defining a recession, but that is not scientifically accurate. Just understand that the economic scientists do not look at 2 quarters of negative economic growth as the official definition of a recession. That is like kind of just what they call a hand waving definition. Like, yeah, if it gets down there, then the problem with this recession is that you have a long list of indicators that the experts look at to determine if we're in a recession, and it's really, really difficult because a lot of the data is backward looking, meaning that you're looking at data that came out last month or 2 months ago. So it's really tough to know if we're in a recession. What you can point to is certain areas in the economy that are strong, some areas that are weak, and basically what's interesting about this recession, this so-called recession, is that there are a lot of indicators in the economy that say the economy is doing really well. Unemployment's really, really strong. I mean, in terms of the job availability and everything else, companies are making money hand over fist. They're not coming up short on their earnings expectations. The majority of the companies made more money than they expected to make. That doesn't look like a recession. And so now there are some hot spots, some problems. Inflation is a problem. They're working to kill inflation. And there are some other areas where they say, maybe there's some softness, there's some declining growth. But for the most part, this is not bad. This is really not bad. And this really speaks to the idea that there could be the potential that the market either won't go down much, much further, or it may have hit a bottom. Either way, if you are smart, you should be buying stock. This is not investment advice. This is just me telling you what I believe. Even if it's going to go down another 5%, if you're a net buyer of stocks, you're going to be very happy you did that 5-10 years from now, maybe even 2, 3, 4 years from now. Companies like Amazon, and I've been talking about Amazon like crazy since forever. I've been telling you guys that Amazon is just one of those companies that knows how to navigate these waters. Some companies can't navigate this downturn. Some companies are struggling with this. Some companies got slammed. Snap got slammed. Meta is getting slammed. But there are some companies like Google and others and Microsoft that know how to figure out these waters, and they're going to keep making money. And so I don't think you can go wrong with a lot of these companies. I really don't. So right now, inflation's the top priority. Are we in a recession? It depends on who you ask. So right now there are a lot of good opportunities in the market. If you're sitting on the sideline because you're too afraid to invest, I don't know what to say to you, but I feel bad for you. I really do, because you're really going to miss out on a lot of wealth that's going to be created. Trillions of dollars in wealth are going to be created in the next 2 to 3 years. And the key idea is to be an investor and to be consistent about it. If you invest for your kids consistently, your kids will not just be okay financially, they're going to be well off financially. The $5 a day plan, which you can actually get a copy of that book. It's a free ebook I've been offering. I've given it to over 1 million people now. And I want to give it to everybody in the community that wants one. I mean, you can buy a hard copy on Amazon if you want a hard copy. But if you just want a free e-copy, just go to blackmoneyminute.com. blackmoneyminute.com, the ebook on how to invest, how to build massive wealth by investing just $5 a day is right there. The key idea is to be consistent and do not sell. You do not sell. You do not sell. You just do that for your kid. Your kid's going to have $100,000, $200,000 by the time they're 25, 30 years old. All their economic problems go away. Student loan problems go away. They can buy a house. They can do all the things that wealthy people do. They can be in a position like Donald Trump was when his father, Fred, put him out into the world. Fred Trump prepared Donald to be a millionaire by the time he was 26, 27 years old. So Donald Trump, as much of a jerk and a prick as he might be, he wasn't 29 years old running around trying to, figure out how to get a job. He wasn't running around figuring out how to pay his student loans. He wasn't running around figuring out how to survive paycheck to paycheck. When Donald Trump was 28 years old, he was buying a $400 million hotel. And the reason he was able to do that is because his father, Fred Trump, prepared for his son to be economically successful. So Fred Trump might be a gangster, he might be a goon, he might be a loser, he might be a prick. I don't care what your politics are. You learn from your enemies, damn it. You don't just sit around and get mad about people that are winning. You figure out how to win. You figure out what they did. And everything that Trump did was not messed up and illegal. Some of the stuff he did was just came from preparation. Preparation. That's it. And so anyway, let me stop talking. I'm gonna quit that preaching for today. Do me a favor, hit the thumbs up button, thumbs up, share, subscribe. 2 reminders. Number 1, the Black Wealth Builder Summit's happening this weekend. If you live in Detroit or near the Detroit area, or you want to fly into Detroit, if you go to boycewatkins.com, you can join us for the Black Wealth Builder Summit. I'll be there. My wife will be there also. The Power Networking Conference is going to be in Houston the following week. That's George C. Frazier. And I'll be down there speaking at the Power Networking Conference. Going to moderate some panels. A lot of good people will be there. Dr. Randall Pinkett, Dr. Julianne Malveaux, etc. So there are Black people in your community that are doing amazing work. These are grown-ups. These ain't kids yelling, screaming, and getting dramatic on the internet. They're out here making money. They're doing business deals. They're making connections with Africa. They are establishing trade delegations going across the country, across the earth. Actually, Dr. Ken Harris out of Detroit is actually pulling together delegations, and they're literally just establishing trade routes in Africa. So this is what the grown-ups are doing in our community. They're not acting crazy like the rappers. They're not running around with 20 million Instagram followers to tell you how many babies mamas they have. They are literally out here making millions, if not billions of dollars, doing real business deals in a grown-up fashion. So I encourage you to pay attention to these people, because these are your teachers. These are your leaders. So I'll be in Detroit this weekend at the Black Wealth Builder Summit, and then next week I'll be in Houston for the Power Networking Conference, because I want to network with powerful people. All right, the last piece I want to throw in here is I read something about McDonald's and Beyond Meat. That was really interesting. So the Beyond Meat stock just plummeted because McDonald's was testing something called a McPlant. And I'd be curious to ask y'all a question. I don't know if y'all eat at McDonald's or not. Some of y'all probably think it's like a sin or a crime to eat at McDonald's. I don't do that. I mean, I'm 51. I'm not trying to eat there like every day, but I don't think it's like the end of the world if I take the kids to McDonald's and get a cheeseburger or something. So how many of y'all would eat at McDonald's or any other hamburger restaurant if you knew your burger was made out of plants? Like, how many of y'all would want like have tried like veggie burgers or McPlant type burgers and stuff like that and really thought they were good? I'm gonna tell y'all the honest to God truth. I went to Burger King and I tried that Impossible Burger, and it was like it was rubber, man. It was the nastiest thing I ever ate. I really felt like I was chewing a rubber band. I was like, man, if I'm gonna do all this, I might as well just eat a salad. So I was not a fan. I'm not a fan of any of that. I don't get it. It doesn't work for me. Don't get me wrong. I've eaten at like vegan restaurants and stuff, and I like what they'll do. Somehow they'll make like General Tso's cauliflower. They'll take the stuff you like and they'll use vegetables and make it really good. It's really good stuff. But like a cheeseburger, if I eat a cheeseburger, I want a burger. I don't want like plants that are pretending to be burgers. They just don't taste right to me. So anyway, so Beyond Meat stock actually dropped because McDonald's tested out their McPlant burger and it didn't go very well. And a lot of Beyond Meat's original sparkle has kind of dropped. The stock's dropped about 53%. So I don't know if that means that it's going to stay down, though. Here's what I think. I think that when the recovery takes place, it's coming. Believe me, the stock market recovery is coming. these stocks, these good companies, quality companies, are not going to stay cheap forever. I believe Beyond Meat will be one of those companies that also goes up along with the rest of the economy. So, but right now, Beyond Meat is kind of being hit hard, and it's kind of interesting to sort of watch that happen. All right, guys. So, by the way, I told you I'd give you the stock pick of the day, and I'm going to do that right now. And so before I do that, I want to remind everybody, don't forget, we have our financial flashcards for children. If you have kids and you want to teach them economics, we invented some financial flashcards that are extremely good, extremely effective. And we have some for finances. We have some for entrepreneurship. So if you want to start drilling your kids now to make them ready, to make them business champions when they get older, feel free to go to financialflashcards.com. That's financialflashcards.com. All right. So the stock that I like for today is actually Signature Bank. I bought some shares in Signature Bank, and that's a company that I did some research on, and I'm owning it because they have good management and their stock is underpriced. So basically, Signature Bank is a stock that I really like right now, and that's really what it is. All right, guys. So I gotta go. We're about to get ready for options class. If you'd like to join us, feel free to go to boycewatkins.com. It's the options income class. You're always welcome to join us, and I'll check back in a little bit later and let you guys know what I'm seeing in the markets. But until then, be consistent. Don't be scared. There's plenty of money to be made. I don't want you to miss out because of fear. I'm telling you, fear will leave you broke every damn time. Don't be crazy, but don't be scared, because both of those emotions will hurt you. So anyway, have a wonderful day. Hit the thumbs up button on your way out. Love you. I'll see you soon. Take care. Peace.